going to go ahead and get started. This is the introduction to homeownership, keys to homeownership. It's specifically designed to talk to a little bit about the questions that people have when they get started in the home ownership process and the things that they, need to know going forward and being able to purchase and all that. I always talk about, where does your story start? And my story starts with my grandfather. He fought in World War II. And then when he came back, he was a school teacher, and he taught school in Waco, Texas. And where I spent all my summers was in Waco, Texas. And I can remember, sometimes getting to go to class with him and some of the students. And I just have so much respect for teachers and what they go through today, and just the difference of what life is like for them now. And then that's my daughter, Landry, and son, Zach. And Zach went to, he's in the Navy Reserves, and he's 22, and Landry is now 12. And then down below, the person that also served in the Navy was Don Sinclair, which is Ben's dad. And he and his mom met in the Navy. So I just like to talk about that a little bit, because everybody's story starts somewhere, and everybody that's on the call has a story, and it started somewhere. And on the left-hand side, I always show the picture of my childhood home when I was growing up in Arlington, Texas. That is actually a picture of the house. It's 1920 Westview Terrace in Arlington. And my parents rented my childhood home for 19 years. 19 years. So based on today's math, that's about $497,000 that they paid in rent, maybe a little higher at this point. And so, one of those things that I became an advocate of home ownership and wanted to be able to share as much information as I could to help people, give them a hand up into the process. And that's why we started these classes. And I appreciate Philip Price, and is on here from Lufkin, Texas. Say hello.
Hello.
Philip has a great story of selling. He bought a home in Hudson, and right outside, it's Hudson, right? It's right outside of Lufkin.
Yes.
And in order to qualify, he had to sell some cows, and he had to get those cows evaluated. So we get it. So we totally get it. Like anybody that's on this call that has to make the math work or figure it out, we're definitely the group of people to do it. And I think I saw Ken on here somewhere. I'm not sure where he went, but Ken is on
I'm here.
Okay, and he's in Spring. And I was talking to Ken the other night, and he is very talented at beach properties. So he was down in Crystal Beach doing some stuff. So if y'all are in a position where you want to buy a second home or an investment home, especially down on the coast in Galveston or the beach area, Crystal Beach, that's your guy. He knows the ins and outs of all of that. And then like I said, he has an office in the Spring area. And so another person that's on our team is Miss Kelly Campbell. Come on down. She's a licensed loan officer, and also kind of keeps us in line with all this, all of the stuff that we need. And on our team, we all have a lot of experience. So we all come to it with experience in conventional, VA, FHA, jumbo loans, first-time homebuyer programs, seasoned homebuyers. We've all served in capacities with large banks and mortgage companies. We're kind of an award-winning team, this group. Best of Denton County, best of Lufkin, best of all things cool. That's what I say. We have a text string with all of us called the Cool Kids. So
there you go.
The cool kids. But what I would like to do is we talk about why buy, and we talk about affordability, the investment, versus the expense, fixed payments, tax advantages, and of course the freedom of owning your own home and being able to call it your own. And one of the things that we have been doing, and that we do the second Tuesday of every month, is we're doing these virtual homebuyers classes. And every month we'll have an expert. And our expert for this month is Miss Amanda Gardner. And Miss Amanda is with Goosehead Insurance. And a round of applause. Get it? A round of applause. And so I'm going to just take a few minutes to give her the floor so we can talk a little about insurance. You are muted. I see that she's unmuted now. And I do want to say Amanda was so great. We had our Highlands Residential Mortgage ribbon cutting in Flower Mound. We're officed in the Caddo office. If y'all are in the area, you always say come by and see us. We're in Suite 240 right now, but we're about to move downstairs to Suite 140. So anybody can come see us. We do a lot of one-on-ones, and Amanda and I had a team meeting with another real estate team in our office yesterday. So if you have a group of realtors and you want to have a meeting, we could do that. We're going to be doing CE classes out of that training room there in the Caddo offices off of Long Prairie. So it's all exciting. So anyway, without further ado, let me just introduce Amanda real quick. The reason why this is important is I think a lot of times people go, okay, well, what do I do about insurance? Like, do I go pay it? What does all that mean? And then, so I'm going to let Amanda speak to that. And then what do they shop for when they shop for homeowners insurance? You tell us the great insight, the great Amanda insight as to what they should be looking for.
Great. Oh, can you hear me okay?
Yes.
Great. Okay. Well, thank you, Stacy. Thank you, the Highlands team, for having me on today. It's a pleasure to speak with you guys and help make a little more sense out of insurance. I don't know if that's possible. I know it's Greek to most people, and it's even more frustrating and confusing nowadays. So I love to be a resource. If you have any questions, even after this, feel free to reach out. I'm kind of an insurance nerd. So
Kelly, can you put her contact information in the chat? Thank you.
Thanks, Kelly. So I guess I would start off by saying with home buying and insurance, it's definitely, I'm going to be one of those people you speak to or someone similar to me in helping you figure out what costs, what you can afford at this point, also what kind of coverage options you want. And the first thing I would say is not every policy is the same, unfortunately. And that's what makes it super confusing, is that every company does things a little bit different. So when you get quotes from 5 or 10 different companies and you're looking at that bottom line price, I'm a big believer, and I say it over and over again, just know what you're paying for, especially nowadays when we're paying way too much for insurance. Just know what you're getting for that cost. And even if it is something that you have to purchase that may not be the Cadillac that you want, but you need to get through to close, we help you do that. So the things you want to look out for when it comes to homeowners insurance, I would say the number one thing people are looking at closely today in Texas specifically is roof coverage. The deductibles you're carrying on roofs, are they giving you 100% replacement costs? So if there was a wind, hail, hurricane, tornado, because that's more specific to the roof issue, what would your out-of-pocket look like? And where is that medium where it's allowing you to keep that deductible at a price that you can afford if something should happen? Because your deductible, if I nerd it down and get down to the weeds, is the portion you're responsible for before insurance takes care of the rest. So if you have a $3,000 deductible, you're going to be responsible for the first $3,000 before insurance takes care of whatever the remaining costs are for the damage. So what historically in the last couple of decades has been the norm is 1% here, especially in North Texas, 2% down south a lot, is slowly turning to a 2% here in North Texas as well. So you have to be very careful. Some quotes that I've seen other agents provide clients have 3-5% deductibles. And sometimes that's not necessary. You can find a very affordable policy with a competitive deductible. The second thing I would say that look for is the dwelling limit, how much they're insuring the home for. I know it's a little different as far as purchase price, loan amount, and then the insurance policy and insurance companies want to insure the home for what they have estimated it would cost to rebuild in today's dollar, labor, materials. So you want to make sure that, that's in line with price per square foot. We're not all contractors, but they usually have the tools to estimate that for you. And surprisingly, it's going to be probably around your loan amount or above. But there's a lot of people or agents, let's say, that will lower that and have you underinsured just to get that price point where it's at. And surprisingly, $50,000 difference in coverage can be as little as $30 difference in premium. It's not always, as much as it sounds as far as what you would pay for. But make sure you're insuring your home properly. And then lastly, I always bring up water coverages. Not all water is covered the same way with all these insurance companies. Just like the roof, over time, they've gotten more and more picky on what they will cover when it comes to a water loss in your home. And every single company does this a little bit differently. So that's what we try to do, is help new home buyers navigate, make sense of it at a high level overview, answer any questions you have to make sense of it, to make an educated decision, at least enough information to make that educated decision. So that's what we like to do.
That's good. Does anybody have just a real quick, we probably have enough time for 2 questions. Any, Susan, go ahead. This is a realtor, Susan, and she's at her back. We're jealous. Her background is in Hickory Creek there with the lake.
Amanda, I'm so glad you touched on the water coverage issues, because the whole time you were talking, that was the one thing I kept thinking about, was the water coverage has become so confusing. And I don't think it's that I just necessarily got a lot dumber over the years, but it's just gotten really complicated. And especially not just my clients, but my investor clients who have rental properties are really suffering from just not understanding what the heck kind of water damage coverage we should have. Is there anything you can give us for high level guidance on what to do? I mean, I'm telling all my clients, just buy all the water coverage that is offered anywhere.
Right. No, that's a fantastic.
And let me just ask this question. So when you were talking about water coverage, we're talking about, something, under the sink, like a leak under the sink or stuff like that, Amanda? Is that,
right. So
okay.
to try to keep it high level, basically all insurance policies, most of them, I won't generalize too much here because again, there's companies that do things a little bit differently, but most companies will insure what they call sudden and accidental water damage these days. In the 90s, the black mold issues down in Houston, this all, the insurance contracts got reworded to include sudden and accidental. So that's your pipe that bursts, the water heater, floods the house, the freeze that we had here a few years back. Most of those types of sudden and accidental claims are covered in the policy itself. You're not going to be able to look at anything on a quote to see that that's included. But there's typically 3 additional water coverages that you can purchase. And on landlord policies, it's iffy because a lot of them don't include the ability to add all 3, but a homeowner's policy will. Yeah, we can go down that road more in the weeds, but those 3 additional coverages that usually have the opportunity to add on, and typically at an affordable price, surprisingly, one is water backup. So any sewage or drain backing up into the home, causing damage, you will usually see that listed on the quote or the policy. It'll say water backup. Most limits I see are $5,000, $10,000. You can buy more with some companies. I would say that's not as common of a claim. In here in Texas, I think you see a little more of those as you go east and where there's basements, but it can occur. And then the second out of the 3 is water foundation coverage. So anytime you see the word foundation on a quote, it's not coverage that's repairing a foundation. No insurance company is going to repair your foundation. Anytime you see the wording of foundation or foundation water coverage, it is that slab leak type coverage. It's those leaks under our concrete slabs. So of course, those can be pretty costly to get done. And I do see some companies gray on how they're extending coverage, but let's just put it this way. If you don't have that endorsement, you don't even have that argument. So most companies will give you 10 or 25,000.
Just a shout out for Goosehead Insurance. I have Goosehead Insurance on my home in Flower Mound. I've owned this home for many, many years, and I had a slab leak, and I had coverage. Yep. I almost died.
I had one myself. I had one myself, and it was a $20,000 claim. And that was within the first 5 years of us buying the house. So exactly, without that coverage, you don't even have the ability to file that claim. And then the last one is the more tricky one. It is what they call seepage and leakage. So this is exactly opposite from sudden and accidental. This is something that's been leaking and seeping for a period of time. So it may be, that shower pan leak behind the wall, and you find out about it months later, maybe during a remodel, and then there's mold. All companies are going to exclude this. They do not. This is the mold issue. This is why they changed the wording to sudden and accidental. So anything that's been leaking and seeping for a period of time, most companies will have the right to exclude. For example, Allstate doesn't even give you the ability to add that coverage. When you have an Allstate policy, you have no seepage and leakage, period. Home, landlord, whatever. But most companies do offer a way to buy back some of that seepage and leakage coverage. And I would say, especially in older homes, even new home buyers, you don't really know what you're dealing with. Some of us that have been in our homes 20 years, we're like, we know what our problems are, but it doesn't mean it can't happen. And I think that's a great question, because other than replacing your roof here in Texas, water claims are the most likely claim most homeowners have. And if you don't understand what you're buying and what you're missing, maybe for even $100, $10 a month difference, you want someone to help you navigate that.
That was awesome. Thank you so much.
So
My pleasure.
great. Such great input. And the other thing that I would say is that we love to partner with people that, obviously put the customer first. And I know that sounds silly to say, but it is so true. And I was working with a customer just this week, and it's a veteran VA loan that's closing this month. And I'd referred Amanda, and what he had in terms of a quote, he was in good shape. And she told him, she's like, this quote's good. And it wasn't with her, you're in good shape. This quote's a good quote. I would go back and ask these 2 questions, and then you're good to go. And I just thought that was incredible that once and she told him, she's like, look, we're going to revisit in a year, but for now, this gets you to that point. I do want to say something to what you said when we're talking about homeowners insurance. We want to get you to closing. We want you to be insured. We don't want it to be some janky insurance policy. We want you to be in good shape. But when you're purchasing a home, would you say this is probably not the time to try to insure other items like, personal stuff, or, I know that Karina and I one time had somebody where they had a bunch of, let's say in Texas, they had armored protection, and they had lots of things. And that's not what we don't want, an insurance policy that has all these line item things, because it elevates the payment.
Absolutely. And a lot of times, especially with new closings, this is something we can visit after, but especially now because of the homeowners insurance market, I'm trying to encourage people to put that on a separate policy. We have Jewelers Mutual, we have American Collectors, we have separate policies. So when you're shopping your homeowners insurance, you're not having every year or every couple of years, you're not having to come up with appraisals again and going through the underwriting process, having it affect your mortgage payment. If it's on a separate policy and you go through that once, there's not really the need too often to have to revisit that unless you're adding and removing items. And it kind of keeps that separate. And we can do that in a follow-up call after closing to make sure that those things are proper, because appraisals are needing, it really can delay the process. So, we even auto sometimes, if there's some quirky things going on with their, let's say, colorful driving history, and they really want to try to do something that's not making the most sense to get them to closing because of hoops that they may have to go through, we're gonna always steer them to get that decision made, and that gets them to closing, because we can always revisit insurance.
Very good. Well, I told Amanda this morning that I would have her on the first part of the call, and then she's like, I'm staying on the whole call. So if you have questions, please feel free to put them in the chat. And as we're moving along, she could get those answered, and then we'll have some here at the end. I definitely want to finish on time. I know y'all's time is valuable. And again, we just talked about affordability, the investment versus the expense, fixed payments. Most of the type of loans that we do are fixed loans. We do have ARM loans. There are other types of loans that we have, but the majority of loans we do are a 30-year fixed, 15-year fixed from time to time. Obviously, the tax advantages of owning a home is the deduction of the property taxes and the interest on the loan. One thing that's for sure, if you're renting, 100% rent is not tax deductible, 100% of it. So we encourage the homeownership for that. And again, we talked about the freedom. Why do you need a realtor? We talk about this a lot, and it's just so important that we stress that. I just love this picture. What real estate agents have market knowledge. They have a license. You don't want someone, people are like, oh, I think I could do it myself. Would you go into a courtroom and represent yourself if you were accused of something, especially if you didn't do it? You would want representation. This is a contractual agreement, and a real estate agent helps to find the perfect home. They have the inside scoop. They also stay objective. I know there's a lot of times where having a real estate agent that is they're not emotional, because this is not an emotional investment for them, and they want to take good care of you. So it's very important. Like I said, when we're dealing with real estate agents, they want to handle the negotiation for you. They do the negotiations, they schedule, they guide you through inspections, they communicate with the seller's agents and the title company, and then schedule the closing. And again, there are so many more. Those are just a few bullet points of why you need a realtor, but there's so many more that I could say. And I don't know, Susan, if you want an opportunity to have a piece of input there, you're welcome to.
Thank you for that opportunity. I'll pass in the interest of time. I think most people know, we're professionals and we do this all the time. I'm in hundreds of houses every year, whereas the lookers, the buyers may only be in one or two. So, there are a lot of things like that, but thank you for giving me the opportunity.
You're welcome. So the net gain by buying a home, I know I've mentioned this before because I talked about, my childhood home. My mom lives here and lives in Flower Mound, Texas, and she lives in a house. She's turning 84 years old on Friday, and she lives in a home, and there is no expiration dates on dreams. The home that she lives in, she was almost or right at 60 or so when we purchased that house. And again, the timing is everything, right? They increased in value. We purchased that home for her and my dad at $159,000. And here in Flower Mound, I can tell you right now, it's worth more than $159,000. So she has had an opportunity of net gain. And over the course of time, it just talks about what your initial gains can potentially be, an appreciated gain over the number of years. And, the properties have just, we're fortunate in Texas. Everybody wants to come here. And so it does increase our values over time. And I just think that a lot of times people are like, well, is this the right time? Is this the right time? You cannot time the market. I'm going to say it again. You just cannot time the market. It's impossible. We had people that when the interest rates, and Karina and I talk about this, when the interest rates were 3.5, they were waiting to see if it was going to get better. Let me wait to see if it's going to get a little bit better. And you just can't time the market. If you need a home and you need to start building equity, you need to make the move. I did a podcast with the Texas State Affordable Housing Corporation. We can send this out later. This is the QR code, but it's a 30-minute podcast just on credit, or all I talk about is credit, the improvement of credit, what to do. And we can send that out, and I can even share it at the end. Common mortgage myths. I thought I would share the screen and let Philip speak to the myths of common mortgage myths, and maybe he might even want to add some of his own.
Okay. Thank you, Stacy. Myth. If you get pre-qualified for a loan, you'll definitely get it. All right. Fact, even if a lender says you're pre-qualified, chances are you will need to provide more information before you're fully approved. This rings so true. There has been cases where customers put on their application, they make an amount far greater than what their pay stubs reflect, or their verification of employment reflects, or their tax returns reflect. Had situations where they've left their job and decided to become self-employed right before closing. So it's important that
We love that. Kelly
have-
loves those types of
Yeah,
loans.
that we have solid numbers from the beginning. All right, next myth. You need perfect credit to get a mortgage. I run into this quite often. Many people think that they have to have stellar credit to get qualified. Did you know that you can go all the way down to a 580 credit score and possibly get approved? So a lot of people don't know that. So, in fact, lenders consider many factors when reviewing your application. If they are satisfied with your overall financial situation, you may still qualify. So what that means is we're looking at additional compensating factors. Maybe that's your remaining funds after closing. We refer to that as reserves. Maybe that is your debt to income ratio, that you can easily afford this specific addition of a payment. So those are all compensating factors that help shore up a less than ideal credit situation. Another myth: 30-year mortgages are the best option. Well, in fact, they typically offer the lowest monthly payments, but they're not necessarily the best for everyone. As an example, maybe they're just wanting to get a lower interest rate and pay the loan off in 10 to 15 years. Well, they don't need to be in a 30-year mortgage if they're at that point in their life and they're wanting to be debt free before they go into retirement, for instance. So every situation is a little bit different. So everyone does not need to go 30-year. Another myth: you have to put 20% down to own a home. This is a very common misconception. In fact, it's generally smart to pay as much upfront as you can to reduce your monthly payment and the amount of interest, but depending on your income and credit, you may qualify for a loan that requires less than 20% down. I deal with first-time home buyers on a regular basis. They don't realize that you can get into a home with possibly as low as 3% down on a conventional loan. USDA loans, 0 down. VA loans, 0 down. FHA loans, 3.5%. So there are low down payment or 0 down payment options out there, and many people just don't know that they're available.
Great. The FICO, like your FICO credit score, one of the things that we get questions about all the time is why is my score the way it is? And the makeup of your credit score has a lot to do with these factors: your payment history. The best predictor of the future is the past. And so one of the things that we look at is payment history. And so a lot of times, especially sometimes, people go, oh, well, I'll just have one thing late. I'll just pay this late. It's no big deal. And the payment history is the hardest thing to overcome, because once you have a late payment, it is on there. And it takes a long, long time for that to drop off. The amount owed, 30% of what you owe, that is also makes up your credit score. So this is kind of like a wheel of information. The length of credit history, 15% is how that makes up your credit score. New credit, 10%. And then the type of credit in use, 10%. And I want to speak to this a little bit. I'm going to introduce Ben real quick and let him use Zachary as the example of like length of credit history, new credit, and how we were able to help establish. He's 22 years old, and he started, to establish credit for him at 18.
Yeah, Zach is my 22-year-old, and when he was a senior, I think 19, it took him forever to get his driver's license. That's a whole nother story, which is probably a good thing in retrospect. But I bought him a truck, and I put him on the loan. The credit union didn't want to do it because he had nothing. He didn't have a credit score. He didn't have anything, but I did. And so I got him on there, and the deal was, as long as you're in college, man, I'll pay you. I'll help you out. I'll help you make the payments. He was paying in the summers. When he was going to school, I was going to pay for it. And the other part of the deal was, well, if you, and this is a kid with 0 credit. If you decide to go out on your own, then you're on your own. You get your cell phone, your truck payment, your insurance, all that stuff. And he said, yeah, he understood, but he really didn't understand. And so sure enough,
no one's had kids like that, right? Right, right, Philip.
So he gets out of A school and all that, and gets into the Navy Reserves, and he says he's going to see a friend in North Carolina, and he's not going to school, and that's a whole nother story. But I said, well, here's your car, man. You need to go refinance this, and and here's your insurance and all that. And he went down to Navy Federal Credit Union, and he put the car in his name. I was thinking that was going to stop him because he wouldn't have been able to do it. But since he'd been on that installment loan with me for about 18 months or so,
Almost,
I
think it was 2 years.
Maybe 2 years, but he had good credit. They gave him a credit card. He put his insurance in his name. And nobody really teaches kids that, but because, we helped him out and get credit going, and he had a good pay history, he's got good credit now. He's got above a 700 score. And it's, if without me putting him on that loan, he wouldn't have been able to refinance that into his name. And he's still paying on it, but he's getting close to the end. So that's kind of the way you build credit. You really need, one installment account, like a car payment, and one revolving, like a store card, at least to get your score going. And it doesn't take long to build a score. If you get 6 months, or less, sometimes with those trade lines, you can have a usable score. You may need some help from a parent, or a sibling, and we're not off, to help you get started. But, if you've got a kid, get them into credit early, because it'll help them out down the road.
And authorized credit. So an authorized credit user, like when we look at a credit report, we can tell, because it'll tell us they're an authorized user, meaning that someone else had the established credit, they became an authorized user, and that helped bolster, or in some cases, create a credit score. But occasionally we will have loan applications. And when we have loan applications where somebody has no credit, it's very difficult for us to be able to put them in a position to purchase, because we need a history. Like I said, the best predictor of the future is the past. And the FICO makeup score, if you will, what gets there, sometimes it's credit history. So sometimes when we go to approve, to get an automated approval on a loan, if their credit is so new, they only have 2 trade lines and it's less than 6 months old, it still makes it challenging to get an approval. So we do what we can to provide them the best advice. The other thing I would say is, if you only have 3 trade lines and one of them has a late payment, it's going to crush the score. I mean, it will absolutely crush the credit score. So if you have a great score or a good score, and you have one late and you only have 3 trade lines, it's really, let us help you, because this just kind of gives you a range. 720 to above is considered excellent. 680 to 720 is great. 620 to 680, good. 580 to 620 is fair. Any of those ranges, we have loans that you can qualify for a mortgage with as little down as 3% or 3.5%. But anything below a 580, it's tough. I'm not saying it doesn't exist, but it's a tough, it's tough to get approved.
And very expensive.
And that's the other side of it. The better the score, the better the opportunity, the better the interest rate, all of the better the insurance rate, right, Amanda? There's that. This just kind of gives you another thumbnail sketch to credit scores. I sometimes get this question, well, what if they already know? So Ben talked to someone today, and she kind of already felt like she had some bumps on the road on her credit. And he said, I can't diagnose what I can't look at. So if you want us to look at it and provide proper advice, then we can provide some advice, and we may even be able to provide some advice on how to improve it. And one of the things here just kind of shows what we use, like a credit simulator. And the credit simulator is almost like a what if simulator. What if we pay this off? What if we pay that off? And we will do that in cases we're trying to find a way to get someone to qualify. And it's not, this isn't an immediate fix. Sometimes it might even take 30 days. It might even take 6 months. Sometimes I've worked with people, I know Karita, and I've worked with people sometimes where she just gave you the thumbs up. We just had to get them on the right track, right? Looked at some stuff. But one thing I will say, if we show, hey, pay this off or pay this down, this will increase your score. It won't help if you go and you charge something else up while we're trying to fix that particular trade line. But we'll do like a credit simulator in order to help improve your position on your credit report. Any questions so far? Do you know your credit score? This talks about doing, checking your score annually. This is also a QR code we can send out. I can have Kelly put this in the chat. The ftc.gov, annualcreditreport.com. These are places that you can go to check your credit report. People say that you should check it once a year. Last month, we had our expert was Amy Klunder from Rising Point Solutions, and Amy said that it needs to be checked more than once a year for things that are erroneous or things that may have been misreported. But what makes up your mortgage payment? Principal, interest, taxes, and insurance. The good insurance lady, she's here. So principal is the amount that you borrowed, excluding the interest. The interest is the interest charged for the use of the borrowed money, whatever that interest rate is. And again, better the credit score, the better the interest rate. Based on the property value and decided on a certain municipality is where the property taxes. And not in Texas, not all property taxes are created equal because every county is a little bit different. It's also different because of the school taxes. And then you've got homeowners insurance. The only other thing that's part of the mortgage payment is if you have what's called mortgage insurance premium. And mortgage insurance premium is what is on a loan when you don't have 20% down. The mortgage insurance premium is to help to protect the lender if you default. So those are, there's 4 things that make up a payment, but also that one other element if you don't have 20% down. Where will the money come from to purchase your home? Checking and savings. Obviously, when we save money, that's a good thing. Gift funds. You're allowed to have gift funds. So let's talk about what gift funds are. Gift funds are when you have a family member, a relative, a parent that wants to gift you some money that you can use towards the purchase of a home. We have them fill out a specific paperwork, a specific gift letter that we will create. You're allowed to have there's no limit to like gift funds that you can have. So, that part of it is not like it's a certain max or minimum or anything like that. One of the things I talk about with young people sometimes is people will say, well, my parents will give me money for a wedding or they'll give me money to purchase a home. And Karita could speak to that a little bit. But having gift funds from a parent, if that's available, or sometimes it's any type of relative, it's very helpful. You can have a 401k loan. There's a lot of people that have 401ks and they don't know that they can get a loan against it without penalty. And in your terms of withdrawal paperwork, you can look it up and it will tell you what your terms are on a 401k loan in order to be able, like a hardship. It's a hardship loan to be able to purchase your first home. Ben, were you raising your hand?
I was just going to add about gifts. Make sure if you're going to get a gift to get with your loan officer before you receive the gift. If you knew my dad and you were trying to get his bank statement, you might as well just give up. To verify a gift. But if your loan officer structures it right, you can do it without having to get your 86-year-old dad's bank statement, or some situation like that. So talk to your loan officer about how to receive the gift, and you can cut down on a lot of the paperwork and the hassle.
It's definitely an area where we like to guide people in advance. If they just let us know that they have potential to get a gift. The other element is a cash value of life insurance. I had a customer not too long ago, and her parents bought a life insurance policy, very small policy for her when she was very little. And, it's termed. There was it wasn't going to increase in value. And they said, hey, we don't need this now. You're an adult. If you want to use it towards the purchase of a home or cash that insurance in, you can. And that's what she did. The sale of personal property. I have a boat for sale. It's a pontoon boat. If anybody wants to buy a pontoon boat, I have it for sale. If I were to take that personal property and utilize that towards the purchase of a home, all I would need to provide the underwriter is a bill of sale and then the deposit of exactly what the bill of sale was. And that's proper documentation of personal property. And sometimes people have that, like, I'll talk to people and they've got, a motorcycle that they other half doesn't need or something along those lines. We wouldn't want to do that, Amanda. We wouldn't want to sell that motorcycle. No way, no how. So employer assistant programs. I'm always surprised that there are employer assisted programs and people don't know. So look up your employee handbook if you work for a corporation just to see if there's any type of assistance towards closing costs. This time of year, IRS, tax fund, tax refund. So you can take the tax refund after filing your taxes and just put that aside in a savings account, and that can be used towards the purchase of your home. I talk about second jobs. You can't use a second job as a form of income unless you've had it for 2 years, like a part-time job, but you can use that income as a form of down payment. You set that money aside and that money is just dedicated towards your down payment. Mortgage credit certificate. A mortgage credit certificate is it's not a tax deduction, it's a tax credit towards the liability of, towards your income. And mortgage credit certificate has been around for like 30 plus years. Due to the increase in the interest rates, they backed off doing mortgage credit certificates. The plan is for the mortgage credit certificate to come back in April. So we're looking forward to having a mortgage credit certificate available to us starting in April. The government backed off of it a little bit, but it is a tax credit towards the liability of your income. So it's a great thing. And we buy the mortgage credit certificates through TSHAC, which is a down payment assistance program. And TSHAC stands for Texas State Affordable Housing Corporation. And our team just got awarded for being in the top 20 in Texas. So we were excited about that. Whoop, whoop. So we've several years in a row. I serve on the advisory council. I just was at a TSHAC meeting on Thursday night. Ben came with me, went to a dinner, and it's a state agency. We do several of the state agencies, but we definitely love TSHAC. It's very straightforward. It can provide you with up to 5% assistance towards the purchase of your home. You can have gift funds and down payment assistance together. So you can stack, you can have both in order to be able to qualify. Sometimes people need both, and it's great when they have the opportunity to utilize that. Any questions so far? So a lot of times people will ask the question, well, they get on here and they're like, okay, well, why Highlands? Why your team? And we're just very knowledgeable. We're knowledgeable in our profession and the different loan programs that we use. You want experts in the field. You want people that have seen all kinds of things. I think Susan said it earlier when she said she looks at all kinds of homes, and yet sometimes when people are buying a home, they might look at like 2 or 3. So we've seen all kinds of things. When it comes to loans, we look ahead. It's like Ben was just talking about, hey, talk to your loan officer before you get gift funds, because we've experienced all kinds of things. You heard Philip talking about don't change jobs right before closing. He's saying that to you because we've experienced all kinds of things, and we try to head those things off at the pass in advance so that we can make it so smooth for you. We guarantee a 15-day close, and we go over, there's all kinds of product mixes for your financial goals. Like Philip was talking about earlier, you may not necessarily need a 30-year fixed. Maybe your goals are a 15-year fixed. We have a digital mortgage process, so we're able to have an application in your hand. Everybody's got their phone in their hand, and it's all encrypted, and then you're able to scan and upload your documents directly to that. I've talked about the 15-day close. In-house operations team. It is so great to sit down with an underwriting manager for 45 minutes a week or so ago to talk through a VA loan. Like, I can't even tell you how helpful that is. All of our underwriting happens in Allen, Texas, and it's just nice that it's local here in Texas, we're able to get things done. And then we're very involved in our community. Philip's very involved in Lovekin, Ben and myself. We even drag Kelly out to a few things now and again. And Ken as well. Ken was just doing, I know he's not on camera at the moment, but Ken was just down in the Crystal Beach area with a Mardi Gras deal. And we just try to give back to our community, and we try to stay very involved so we can hear the heartbeat of the community and what people are looking for. Loan programs, we do, Home Ready or Home Path, Home Possible. These are different programs that we utilize in order to make a loan work, and we try to fit and tailor it to what works for the customer. An FHA loan, you can put down 3.5%, as little as 3.5%, and you're also allowed gift funds. You heard Philip talk about USDA. That's a rural area type of loan, and we're becoming less and less rural in Texas. It used to be like Weatherford was USDA, and now it's not. So rural areas, like Sherman, Texas is still considered USDA. Conventional. I know when I was doing a presentation not too long ago, I asked them what the minimum down payment for a conventional loan was, and the majority of the room said 20%. And I was like, no. And there was a lot of first-time home buyers in there. You can do a conventional loan with 3% down, as little as 3% down, and still qualify. We can include the down payment assistance, renovation, construction, self-employed. It is not hard when somebody is self-employed. We just have to look at the taxes. You just have to have 2 years tax returns. It's not complicated. This is a little more in depth about a VA loan. We love our veterans. The Veterans Administration has created an opportunity for a VA loan. It's 100% financing. There's no mortgage insurance premium. There's no cash reserve required. There's a reduced cost on disabled veterans. You're able to purchase, refinance, even on a high balance potentially. The seller is required in some cases to make certain required repairs. So they try to protect the veteran in that way. Nothing too complicated, but we do like our VA loans. USDA, I talked about that already. It's a rural type of property. If you think you want or try to qualify for USDA, the debt to income ratio is very specific, and we have to make sure we have the correct address for it to qualify for USDA. Again, FHA, Federal Housing Administration, you can purchase, you can refinance, you can do a renovation with it. It's less restrictive on credit requirements. So a lot of times if you have had like a bump in the road, maybe you paid something late by accident, something like that, then we're able to qualify people with an FHA. You can have up to 6% seller contribution on an FHA. And that's quite a bit of assistance, and sometimes is able to really get that loan to work for all the things. Like maybe they have gift funds, maybe they have down payment assistance, and they have seller contribution. And then you're able to make the loan is able to work. And a conventional loan, I've talked about that with the 3% down. If you put down less than 20%, it will have mortgage insurance premium. But with a conventional loan, the mortgage insurance premium is able to be canceled. So that's one of the things that's the benefit of a conventional versus FHA. You can also use conventional on a second home or an investment property. I just want to touch on renovation really quickly. One of the reasons that we enjoy our Highlands team is they have a renovations department. And we have someone that we work side by side with. His name is Evan. And what we're able to do with renovation is, it's basically called a home style. We're also able to do an FHA loan. It's called an FHA 203K. Here's the thing. Sometimes we find homes, our buyers will find homes. You might find a home and it's in the perfect location, perfect school district, and the kitchen is just awful, and it just needs a little bit of love. We're also able to do a situation where we have like an escrow holdback. I was going to let Philip speak to that real quick. We don't have a lot of time, but you had recently an escrow holdback. How much was that?
It was around $5,000 in repairs that were needed, and we were able to get that done. Oftentimes mortgage lenders do not want to do this, but we were at Highlands. We're able to get hard things like that accomplished. And how that worked was there were repairs that were necessary in order for it to meet the guidelines of the loan. And I want to plug this in, and the insurance company. I was able to get Goosehead to write it. They had to work on their underwriting team also to show those repairs were going to be done to the property. And without that, those repairs to be done post closing, this would not have got accomplished. So, shout out to Goosehead too, and Highlands was able to work together and making this work for this customer. It's taken a little bit. The contractor got all that work done. We got the appraiser back out there, verified that work was done, and now we're releasing those funds to the contractor. So it all worked out.
You weren't close, but the greatest part is you were still able to close on time.
Able to close on time, no delay at all. And in that situation, the seller was buying another house the next day. So a lot of dominoes had to line up to make this happen. So it really, really worked out good. Mm-hmm.
Great. So like I said, if you've got anything that like a situation where you want to purchase something and it requires some renovation, that's something that we're able to do, and that's exciting for us. Do's and don'ts of home buying. Ken, you are up. Can you see it? I know you're in your car. I'm sorry. You want me to go through it instead?
No, I think I can read it. Do ask questions. If you're thinking it, your loan officer has been asked the same question 100 times before. So don't feel embarrassed. Definitely ask questions. Keep your original paycheck stubs. You can also nowadays, as Stacy said, with the app, you can snap a picture of it and upload it in your file. Provide documentation on the sale of your current home. Closing disclosure once you close. Once again, you can send that over, and that'll be your documentation. If you get a gift, as Ben said, there's a proper form that has to be filled out and signed. We just need to document it. So when in doubt, talk to your loan officer beforehand, and they will let you know how to do it properly and correctly the first time. If you have any employment change, let your loan officer know. Last year, it actually came up. I had a borrower quit the same day he closed on his house without knowing it. Now, he had another job offer, so it turned out okay, but always let your loan officer know if you're expecting to change your job. Any marital status change, be sure to let your loan officer know. This comes up every so often, but a lot of times in Texas, since it's a community property state, if you were still married and separated, it's very difficult to get a loan. The only way to get it done is if the spouse will sign off on it. But once again, when in doubt, talk to your loan officer.
So we got a loan application. So Kelly and I looked at a loan application this week where somebody marked that they're separated and they were on a loan application with someone else. And so, and again, community property state. So if he's purchasing a primary resident with someone else, which is a significant other, then, we had to be able to, because they're going to know, well, they don't need to know. No, they're going to know. Like, you're not, like, this was kind of, a sticky kind of conversation. So anyway, go ahead with the don'ts. I'm sorry. I just wanted to say that.
Okay. All right. The don'ts. Don't change jobs if at all possible. If you're looking for a job, wait till you buy your house to do that. Don't make any major purchases. If you're looking at appliances, refrigerators, I always tell people buy whatever you want after you close, but don't avoid that before you close. Undocumented funds. This comes up quite a bit where we all have money in our, emergency money at home. People think, oh, cash is good. Put it in your account. Don't do that. Once again, talk to your loan officer. Credit card advance. You cannot do a credit card advance for down payment. There are other ways, as Stacy and Ben said earlier, 401k loans. So a rule of thumb, anything that involves money or job consult with your loan officer before you do anything. That's just the safe way to do it. Don't change your closing date unless absolutely necessary. And there are instances where people were getting off work and it turns out they had to work. If something like that comes up, once again, let your loan officer know beforehand. And the last one I skipped is do not open up any new lines of credit.
Oh, yes. That's great.
So
Yeah.
when it's employment, assets, or credit, before you do anything, talk to your loan officer.
That's so great. All right.
Now, I was going to ask, are you saying my video is not showing? Because on my end, it shows the camera's on.
Oh, it is now. Most of the time we were looking at your dash.
Oh, okay.
All good, Ken.
All right.
So all of these do's and don'ts, we could sit here and list this do's and don'ts list. I mean, we could list a whole long list. Now, one other thing I want to say is make sure your driver's license is current. You know, in order to close, you cannot have an expired driver's license or an expired passport. So we want that. That's very important. The other thing is
really hard to get your driver's license renewed at the closing. I have done it once, but there was a lot of mad people by the time that 4.5 hour closing was over.
Yeah. And I do have this too. Like sometimes people want to take all their money and pay off all their debt. And don't do that. Don't do that. Let us look at it. Like I had a loan today where if he had enough reserves, he had enough cash that if he paid off the car loan, which he owned a small balance on, then that was going to help for them to qualify for a little bit more purchase price. But I didn't want him to do it right now. You know, like once you find something you can, cash is king. Like it's so much better for you to have reserves, for an underwriter to know that you have a backup plan and that you have reserves. So don't pay off all your debt thinking that's going to be some great windfall. Reserves are very important. The home buying process, these are the steps. You get pre-qualified. We provide a letter. They take you out, you house hunt, you make an offer. We submit documentation and then we go to processing and underwriting. We get an appraisal. The appraisal is reviewed, and then we go to the closing table, approval and closing, and then we all go, woo, 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 congratulations. And the loan of funds, when it's yours and it's funded, it becomes yours. Again, we've talked about being, the digital mortgage. We've, adopted the digital age. We're sitting here in a home buyer's class virtually, for example. We run cost analysis. We'll look at everything and kind of figure out what is the best plan for you. This just talks about documentation that you need. In most cases, you're going to need 30 days worth of pay stub. If you're paid biweekly, that's 2. Sometimes we do this automated. We do a verification of employment. If that will satisfy that. We look at bank statements. This says the last 3 months. Typically, it's really only 2. We look for 2 years W-2s or potentially tax returns. If you're self-employed, we're going to need tax returns. If you're W-2, then we just need the W-2s themselves. If you're self-employed, we'll also look for a profit and loss statement year to date. If you have any dividend earnings, again, we've talked about employer information, photo ID. We need a history of where you've lived for the last 2 years. And in some cases, like with an FHA, we might ask for a Social Security card. We don't ask for it in every single case. Funds to close should be in a liquid account. It should be an account like a checking, a savings, a money market. Ken already touched on this. It really can't be mattress money. Ben had a customer that brought money to closing in a shoebox that he wasn't aware of. That's not a good idea. We definitely want to be able to source the money. Non-liquid funds allowed if exercised. Not sure what we want to make sure we provide proper documentation. We don't want any strange deposits. Like at the last minute, we get an updated bank statement. I have a builder loan that's about to close in the next 10 days. You don't want an updated bank statement with a foreign wire transfer in it. That's not exciting. Okay. Gift funds are permitted with most loan programs. This is my information. And what we say is, let's be friends. I always tell people, let's be friends. This is Philip's information and Ken's and Ben. Philip and Ken are now also on Facebook. These are QR codes, and we can also send out the links. I'm on Facebook, Instagram, LinkedIn, and then YouTube. Stacy Lynn Mortgage on YouTube. We put all of our recorded, any kind of classes that we do virtually, those end up on there. There are other educational videos. If I do them, they go on YouTube. So you're welcome to look at those at any time. And we're grateful. We're grateful you're here. The last thing I share with everybody is that, and many people have heard me say it over and over again, but I helped my parents purchase the only home that they owned. And my parents were in that house for 2 years when my dad was talking to me like I'm talking to you guys. And then he was gone. At 61 years old, he was gone like that. He passed away. And 45 minutes later, he was gone. And if I hadn't convinced them to purchase a home, my mom's wouldn't have a home that she now lives in and has lived in all that time. So as we're on the edge of helping everybody, we're on the edge of helping make big decisions. This is the biggest investment of your life. And we want to be able to provide you with the best possible advice. And if that turns out that it's not us and turns out that it's someone else, that's okay. But we want to we do these virtual homebuyers classes the second Tuesday of every month because we want to be able to be in the market and provide good advice, good, strong advice for insurance, title, all the partners that make up everything that we need to do to make this work. I just know that that we either came from homeownership or we came from a place where we didn't have homeownership. Ben came from a place where his parents owned a home. He never remembered them not, but they parlayed it. And now his dad is 86 years old in East Texas, and he owns over 100 acres of land and a nice house, and has had some amazing opportunities because he built equity over time. There's a great song, a great country and western song called "Buy Dirt." I love that song. I play it a lot. So buy some dirt, And that's pretty much it. We have a glossary of terms. That's something that we can email out after the class so that y'all will have the glossary of terms, mortgage terms. And if there's anything else, is there any questions? I'll probably go back to if there's any screen that anybody wants. So I'm grateful. I know we ran over a little bit, but I want to thank everybody. I thank all the loan officers and actually thank Amanda for staying on the call and answering any questions. And we'll, like I said, provide her information. I always send out within 24 hours some information. So if anybody's on the call that has any further questions, please reach out. Let us know. Y'all have a great night. Hey, it's Fat Tuesday. Happy Valentine's Day.
Yeah.
Hug it out and buy a house. Bye.